happens if we say people. Kevin, I think the answer is no to that.
Well, it's not 12:30 yet. Let me see this.
$12:30. We're getting ready. We're gonna give people a few more minutes to log in. Thank you all for being here. I know we're excited. I'm sure everybody can sense it. Everybody can sense the enthusiasm. Talking about encroachments and easements.
Thrilling stuff.
It's super exciting.
I get excited about it. I can talk all day.
See, I knew Kevin and Levi and Lisa would be enthusiastic.
Oh, I love it. I just saw the chat. Great. Yeah, guys, keep the chat active. We'll keep peeking at it.
We will.
Looking forward to Stump the Attorney. It's my favorite part of these.
Whatever, that's my favorite part. Since I don't have the
It
privilege
is.
of being an attorney myself, I find it to be super fun to stump attorneys.
And my favorite answer is, I think we're going to have to run that by underwriting.
Yes. I think we'd be better served by running that through up the chain for underwriting counsel.
I can tell you what I think about this, but
Mm-hmm. It might come as a surprise. This is my first webinar. Pretty excited about it.
well, the first of many, hopefully.
Yeah, right? Gotta have the first one sometime.
Looks like a few more people are joining. Kristen, it's your call when you want to get started. If you want to give everyone another minute.
No, I think, well, yeah, maybe one more minute. And then we'll jump in. do this. Okay, here we go. Good afternoon, everyone. I am Kristen Dawson with Community Title Network, and I'm so glad that you were able to join us today. So we entitled this session, What Every Property Owner Should Know. But if we're being honest, it's really more about what every agent and attorney needs to know to keep a deal alive and moving forward in today's market. By now in 2026, we've all seen the shift. Land is more expensive, development is denser, and neighbors are becoming increasingly more sophisticated and sometimes professionally litigious in some of their input and all of that they give us on the different transactions happening in the area. But at Community Title Network, our job is to find a possible insurable path forward. We can't do that in a vacuum. So we need a legal partner who understands how to bridge the gap between a title exception and a closed deal. I'm thrilled to partner with Kevin Bailey, who manages the DC branch of Community Title Network, which focuses on commercial real estate, and he is also an attorney with Whitway Law Group. Kevin and I have been in the trenches on some truly impossible scenarios. Kevin has pulled 5 specific kind of problem solution concepts directly from some of his recent files. I think even this transactions that have been going down, at least in recent months, but probably even this year. And he's going to walk us through these case studies. We'll pull the lessons and takeaways for everyone so that we have an idea of how we can tackle a transaction that starts off in a similar way. But Kevin, let's start with the big one. What's that high-rise project that was literally built over a water line easement? Tell us about
Sure,
that.
yeah, absolutely. And you hit the nail on the head. I think in this market, I've been seeing issues with neighbors and easements and like boundary line disagreements more and more. And these are the sort of challenges that we need to be prepared to address. Both as title agents, but in the marketplace as well. The floating water easement this is a pretty interesting situation. So we were overseeing a construction loan for a multi-unit apartment building, a large apartment building in Maryland that was being built on a commercial lot with pre-existing businesses. If I remember, there's like fast food places, a bank. It was like just a commercial area. And in dead center in this lot, they were putting up this large apartment complex. So, as part of the title work and preparing for closing, we needed to get and also to honor some of the lender's requests, title requests and requirements and endorsements. We needed to get our hands on the plans, the approved plans, but then also the Alta survey. This commercial parcel was in the middle of a highly dense residential area. Wouldn't you know it, when we get the survey back and compare it to the plans, there is a large water easement running directly under where they propose to build the apartment building. No one thought to bring that to our attention at any point in time, before we get the survey, and we're expected to close, in a few days. And I went back and forth with the bank's counsel and also with our underwriter about what could be done. Well, evidently the county the county and the water company had approved a secondary easement, the alternative easement, but the current easement running, which was to be built and I believe was in progress at the time but was not completed. And the current easement was scheduled to be terminated upon completion of the new easement, but there was no completion date. There was no termination in hand. So, for all practical purposes, that easement was permanent and not going away, and we had no way of making a determination as to when it would be terminated, when the new easement would be in place and active and live. And again, it's not like the easement existed in a vacuum. It was running to a high dense, servicing a high dense residential area. So obviously needed water. So the lender asked us. The problem was the lender asked us for a clean Alta 9 endorsement. And Alta 9 is really a bridge to the future. It looks at the blueprints, the plats, and the plans, and really tries to get alignments with the developer's vision of the property, an approved vision of the property, as opposed to what already exists, what structures already exist there. The good news is it's not an all or nothing endorsement. Unfortunately, we can't issue a clean Alta 97 when there is an easement running directly underneath the proposed building and structures. However, we were able to come up with a pretty good solution, and it was agreeable to everybody. There was an understanding that the water company was going to terminate this easement. They wouldn't be building they wouldn't have already filed for a secondary easement that was currently under construction if they hadn't a plan to terminate it. So we were able to issue the 9-7 with a special carve out for that particular water easement. The bank could live with that. But additionally, we made an arrangement. They said, hey, as soon as the termination is recorded, we can issue a post-policy clean 9-7 and you'll get what you want. So, this really was a situation where, in many ways, the easement could have been catastrophic. You can't build an expensive, and this was expensive, tens of millions of dollars. You can't build an expensive structure on top of a water easement. It's a no-go. That being said, there was a plan and a strategy, and it took everyone coming together, and understanding the big picture. Like, what were we trying to accomplish? What were the facts? We were blindsided by the whole scenario because it wasn't brought to our attention. The developer didn't think it was a big deal. I think sometimes developers, that's why they engage. Chris, you probably agree. That's why they engage us for our input. They might not always like what we have to say, but at least we can bring some serious and consequential issues to their attention, while there's still time to address them practically. And then the bank counsel was very agreeable. I mean, we had to play the ball as it lied. There was really nothing we could do about a utility company and a utility easement in a super fast, efficient manner. You're moving at the speed of the utility company. We all knew that it would happen eventually, that the balls were in motion, and it would get addressed appropriately. The good news is that exactly that occurred. We issued the 9-7 with the special carve out that we worked together closely with underwriting to draft that met the requirements of the lender, and also gave them the peace of mind knowing that we would issue the clean 9-7 as soon as the termination was recorded. Fast forward a couple of months, our office received the termination and we recorded it on behalf of the parties. That way we knew it could be that everything was handled completely and appropriately, and we issued the clean 9-7. So, this is a situation where we were able to contain the risk, and until the final sign off from the utility company occurred, and it ended up being a deal maker rather than a deal breaker.
Mm-hmm. And also kind of illustrates being an active part of the solution. So it's not just, okay, well, from a policy standpoint, this is the coverage that we can offer, but you were able to record that termination. And, so it shows the partnership opportunities.
Yeah, absolutely. And it just, I think also illustrates how dynamic we can approach these issues. We can act, we're the title insurance issuer, right? But we're also, problem solvers and consultants not necessarily on the development. We'll leave that to the developers, but consultants on working through some of these matters of record in a way that benefits everybody involved
and reaches the end goal of the use of the property.
Because everyone's interests are aligned, right? That's the one thing, and you probably agree. The bank wanted to lend the money. The developer wanted to build the building, and we wanted to do the closing, right? But everyone's end goal is pretty much the same and in alignment. It's just a matter of working together, dealing with some of these complex issues and seeing it through appropriately.
Mm-hmm. I hear you. You've got another one for us, right?
I've got plenty. This is another Maryland one that brings up an encroachment issue. So the last one was an easement. This is an encroachment. there's actually more to this property. It's a very fascinating property, but with a really interesting history. But in this case, it was a commercial building being sold to a institutional purchaser who was buying for cash. There was no loan, but I never jumped to any conclusions or assumptions that there won't be a loan at some point in time, right? So, but when we got the contract, it was it was a cash purchase, and the as part of the due diligence period and process, the buyer obtained a survey. A couple of interesting things were learned by the survey, but one was there's a portion of the land in one of the corners that was occluded by bushes. So there was like trees and bushes, and you couldn't see through it. And on the other side, the neighboring parcel owner had built a driveway, a retaining wall, put up some sheds, some pretty serious and consequential encroachments while no one was looking. Now, there was a question whether or not they did that intentionally or whether or not they didn't know quite where their boundary line ended. There were no pre-existing fences, and that's really not my matter to weigh in on with respect to the intent of the parties. But our issue was that not only did we have encroachments, there were interesting notes on the survey. I thought it was pretty. I'd never seen this before, where the surveyor said, while conducting, in the notes in the survey, said, while conducting the survey, I encountered a person who claimed to be the owner of the adjacent parcel, who informed me that it was his land, his property, and that these improvements have been made, years ago. Something to that extent. I don't remember the specifics of the language, but as I'm reading, we have to review all the surveys that come across our desk for,
right.
For exceptions and endorsements. And I'm reading this, I laughed out loud. I was like, what is going on here? So obviously we're on notice of not only the encroachments, but then also now a potential adverse possession claim, which is not something we encounter all too often, in our sort of day-to-day activities. To me, adverse possession always seems like a question straight out of a law school exam, and
theoretical, not
the theory. Yeah, it's abstract. It exists, sure, but are we going to encounter it? Mm-hmm. Well, this was very real at this point, right? Not only do we have to deal with the encroachments, but we also have to deal with this possession potential claim. Ideas were thrown out there from all the parties, like you do have an adjacent parcel holder whose interests are adverse to yours, right? We don't know how he wants to play this specifically, but he's made it clear that that's his stuff. That's his driveway. That's how he accesses his property, and he wants to keep it that way. Then you have a seller who has to provide clear and marketable title to the purchaser, and the purchaser who has plans to use this property for very specific purposes that don't include the neighbor's simultaneous use. So the goal really was to skip a potential easement, to avoid adverse possession, and at all costs avoid litigation. What ended up occurring, though, was litigation during the contract period. But really, litigation was used in this context as a tool to bring the neighboring parcel holder to the table. We had a very long closing window. A matter was filed in court, really to force a settlement. And what that came down to, it didn't delay closing. Thank goodness. Cooler heads prevailed. Over the course of time, the parties were able to enter into a license agreement with respect to the encroachments and the access to the parcel. So the license agreement really is just an easy button. It ends the hostile element of adverse possession and creates a permissive use of the property. So that this license agreement for access and for some of these encroachments really avoided adverse possession, and we could all live with that. Now we have a written agreement between the parties that outlines the terms of use, permissive use of the property. But there was still the issue of the encroachments. Keeping in mind, again, this is a cash purchase, so we had a lot of flexibility with respect to how to address these matters that maybe a lender wouldn't have been comfortable with, or maybe would have required more carve outs that Chris and I believe you're going to talk about shortly. But we were able to negotiate. When I say we, I as the escrow agent was able to live with and approve an agreement between the buyer and the seller, setting aside an escrow that would be held by us until the matter was resolved completely. So there was a sunset provision in the licensing agreement for a period of time, at which point the adjacent parcel holder agreed to have the encroachments removed and discontinue the use of the access through that means. Now, the reason why we had the escrow hold back was in the event that it's really twofold. In the event that the neighboring parcel holder didn't remove the encroachments, to be enough money to do so, or secondarily, if there was a violation of the license agreement completely, there would be funds in place to cover the cost of potential litigation.
Yeah.
The whole thing ended up working out just fine for everyone. We avoided catastrophe, and again, I think the point here is that cash brings a lot of flexibility, and leverage when you're a buyer to pave your way forward. And we were at this point working directly with the buyer, not with a lender, so we have a little more flexibility when it comes to what we are insuring. We in this case we accepted to the license agreement, but we did accept to the encroachments. But we also agreed in this case to issue a clean endorsement in the event that they update the survey and remove the endorsements. So everyone was happy with the outcome, actually including the neighbor, because I think the neighbor realized, and we'll talk about this a little bit, in some of these other case studies. Litigation is expensive, and the outcome is not guaranteed. Sometimes it's better to take a practical approach, business-minded approach to these matters rather than a scorched earth approach. And this was a situation where, everybody identified the issue early. It looked like it wasn't going to go. At first it looked a little touch and go, like it might be a little tricky to navigate, but as the matters played out, it turned into a very, very reasonable and practical resolution. This is one of my favorite ones, and this one, I'm seeing this more and more. The not in my backyard NIMBY arguments with respect to development, and sometimes I can empathize with neighbors. I myself recently had in my neighborhood behind my house was a vacant lot. It was very delightful when it was a vacant lot, but we knew that at some point it would not be a vacant lot anymore.
It would stay that way.
And it's not ours, so we assumed. We didn't know when, we didn't know what, and what happened was in that lot they built the maximum size permittable structure. All lot lines and setbacks maximized. Height was within 6 inches of permitted height. That's just the way of the world. And I work in this industry, and then I see it at home, and I'm like,
yeah.
What it is what it is. You accept your fate as a property owner. There are rules and regulations in place, provided that neighbors are abiding by them. What do you do? But go about your business and make the best of it. But there is a professional. I have seen an uptick in professional protesters. Adjacent neighbors trying to prevent or undermine development of vacant parcels or parcels being converted to different use, things of that nature. This was a really interesting situation, and it was an interesting situation that had a result that some may see as not ideal, and the role that we played in it as an insurer wasn't, I think was very practical, but this didn't result in the issuance of an insurance policy, which sometimes is okay, and this is probably the only time that I've told everyone that this is likely uninsurable, and all the parties were happy. And so let's get into this situation. This was a vacant lot that was owned by a nonprofit organization in the District of Columbia, and it had been vacant for 100 years, right? Who knows? There'd never been anything on this, as far as I know, as far as we could tell, and it was being sold. It was in a very desirable, high-dense area of the city, and it was being sold to a developer who intended to build an apartment building there. It was a condominium building, I believe, but multi-unit, high-rise, and had every right to do it. There was no limitations in terms of zoning or land use that would have otherwise prevented it. So he enters into contract. We get the contract. I'm very excited. It looks like a really good project to work on. I was actually very enthusiastic because I knew the seller's attorney very well. A very good attorney, very easy to work with, very communicative, very knowledgeable. Well, unfortunately, about a week into contract, everyone received letters from a neighbor, contained. I think it was written by AI, but at the same time, it contained all these threats and demands that everyone was on notice. The buyer, the seller, the brokers, seller's attorney, ourselves as the title company, were on notice that this development's being formally challenged by the neighbors, and they created a neighborhood organization that didn't really exist, but they claimed that it did, and they were going to take all action necessary to prevent the development of the property, including challenging zoning permits, making claims that they had easements on the property for use, hinting that there were prior existing agreements in place with the current owner about how that property could or would be used. So we get this letter, and it's like the music stops. Like, what am I supposed to do with this? I now have notice of a potential claim. The buyer. I can tell you the buyer was worried. He didn't want to move forward into immediate litigation upon purchasing the property. The seller is worried because, this negatively impacts their title and their ability to sell the property. There are a couple different routes they could go, but they don't want to have to litigate in order to sell necessarily. So we went back to underwriting with this issue, and we talked it out. I mean, I talked it out with a number of attorneys, trying to figure out, what we could do in this situation. And really, we can't do anything. We need the matter. There are two ways to look at it. One is if there is litigation or threats of litigation against the seller related to the use of this property, we need that matter resolved before closing, right? In order to ensure, or we can carve out an exception to that matter and ensure, but for that issue. This is an issue. This is a situation where, the exception that was proposed, or what really the insurer could live with, was just so broad. It was the identified risk is really all matters related to, challenges to zoning, permitting. I can't remember what it actually said, but it was just like, we might as well not issue it. Well, yeah, we might as well not issue a title insurance policy, because what are we actually covering? That's not fair. We're covering a lot of things other than that. But for this developer's purpose, their whole point, it's a vacant lot, was to build up. And if the entire challenge is there's no building up, then we can't insure the construction loan. The purchase wasn't contingent upon financing, but the buyer intended to get financing for construction, so we knew that was a prereq for them, for their plans moving forward. So what do? We got together with our underwriters, we got together with the buyer, we got together with the seller, and we had a very transparent conversation about the facts at hand. is that we can't fully insure this transaction as it stands with this neighbor making these challenges. If the seller wants to address that beforehand, before closing, and we get some sort of settlement agreement, we can move forward. If the buyer wants to purchase the property, with this massive exception, they're free to do so. But these are the facts, and we really asked everyone what they wanted to do. Well, we came to a mutual agreement. The buyer wanted out. They didn't want to get tied up in endless litigation, not knowing what the outcome would be for years. The seller was actually grateful because they knew they were going to have to address this neighbor anyway. They knew that courts wouldn't look kindly if they tried to enforce the contract, force the buyer to buy this contract, without, with this adjacent parcel holder threatening constant litigation. The buyer didn't want to get pulled into litigation, obviously, in that regard, again, fighting over the contract. But the seller knew it needed ammo to go against the professional protester next door, and our insurance denial letter, right, or with reference to this broad exception, was ammo that they could then use to litigate, a potential matter of tortious interference of contract or slander of title against the neighbor. So that's what, and at that point, again, everyone was happy, everyone was relieved. No one was necessarily thrilled with the outcome, but, given the circumstances and the facts, this was a situation where it really couldn't have worked out better. I wasn't put in a hard position of trying to figure out how to insure the uninsurable, or, right? The buyer got out of the contract, he lived to see another day, and then the seller now had legitimate evidence of tortious interference and slander of title, which they then were able to use against the adjacent parcel holder. As far as I know, it was handled. This is facts pulled from real life. Now, all of the none of the circumstances and scenarios have changed a little, but this was based on a real situation. And as far as I know, there is now a real positive path to get this one across the finish line. The neighbor has been sort of addressed.
Mm-hmm. Well, like you said, it's not always what everybody wants to hear, but at least it gave them a path forward, which I think.
Yeah, and it's sometimes, and this is when we get onto the next one as well, it's providing people with accurate information and straight shooting analysis, right? We don't overpromise, and I'll quote Tom Rodden for our company: "Don't overpromise and underdeliver." Like we want everyone to have accurate information. We want to do our best to leave no stone uncovered as to the direction we can take a particular deal. And I'm open-minded. If somebody has an idea, like, well, what about this, or what about, like, we'll look into it. But this is a situation. Yeah, I mean, this is a situation where everybody's hands were tied, and what we were really looked to at that point was providing everyone with the ammo that they needed to fight their own fight. Sort of outside of title. But
good. Next one.
About a week after that last situation, I get a phone call, and it's about this deal.
What a fun week!
I was asked, "Hey, do you have any experience in this?" I was like, "Well, funny you should say that. Absolutely, I just dealt with this exact situation. Not exact, but this is another. This one took a different turn, but it was another problematic neighbor, litigious neighbor. Same issue. Nonprofit is selling undeveloped land in this. The last one was D.C. This one is in Maryland, but the fact pattern is fairly similar. A nonprofit is selling undeveloped land. Highly litigious neighbors. The neighbors put up a huge fight, and then finally they get a settlement agreement. So this is where I get brought on. There's already a settlement agreement in place. Great. So I don't have to deal with the protesting neighbor, the back and forth. They've resolved the problem. And that looked like it was, all systems go, green light for development. They wanted, again, it was residential development on vacant land. Then all of a sudden, the last one was derailed by a letter from the neighbor threatening litigation. This one was derailed by an anonymous letter stating that the parties entering into the settlement agreement didn't have corporate authority to sign. So that the settlement agreement was therefore invalid, which my understanding, everything was approved by court, and there was nothing to indicate that this was the case. But again, now we're on notice. Now we're on notice that there is potential fraud in the transaction, and so the conversation.
That's a non-myth letter because it's hard to qualify what the information that they're providing, I imagine.
Yeah, well, the problem was the content of the information aligned up very specifically with the characters and nature of the transaction. So it was somebody. It was anonymous, but it was somebody who was involved, and the parties. If I recall correctly, the parties had a good idea of who it was. And that was another thing is both the buyer and the seller thought this was meritless. That there was and I tended to agree with them, but we deal in insurance, and I can tell you this: no underwriter I knew would touch this with a 10-foot pole. You hear the F word, and all antennas are up. So I have a note here. Even one chance of avoid of a deed creates 100% risk of scorched earth litigation. This is another situation where we thought the litigation was resolved. The neighboring parcel holders that have been problematic were now on board, and but now it's back to the drawing board. So the conversation then turned to what are our options. We just spent a couple of years working with the seller to get this resolved before we could buy it. Are we going to have to go back to court, open this back up, and wait until we get additional resolution to this? Because really it's like, this is a seller's issue. Go resolve this, seller. Find if there are these challenges to the authority, the signatory's authority, then we need additional documentation, and probably a modified settlement agreement addressing this as well between the parties. And the buyer didn't want to hear that. The buyer was like, "We're over it. We just want to move forward." And what's the other option? The other option is, and I talked to them. I was like, "Look, they were buying it cash, so I will never advise anyone to not get title insurance, right? But if it is uninsurable, and this is something I'm seeing more and more of, unfortunately, but on absolutely uninsurable properties, if you've got parties that don't want to address the marketability of the title, what do? And this was a situation where it was raised to the buyer, who was represented by counsel, very sophisticated counsel, that this may be a business play. This isn't an insurance play. This isn't a litigation play. This is a business play. What is unmarketable property worth, and what's the purchase value of that property? This is high risk, and it's not advised. And I'm not the one giving this advice, but the conversation did come down to that. Like, either the seller resolves this issue, and we can insure. If you don't want to wait for the seller to resolve the issue, you can buy the deed to the property. Then it's your problem to address, and we can work with you on insuring it on that basis. And what is that basis? In this situation, it would be a quiet title action, was what was suggested. So a purchaser buying outside of insurance, with an understanding of insurability requirements, and coming back to us after title has been quieted, to be issued a clean owner's insurance policy. What do we think about that, Kristen?
That's I haven't had a situation like that before, so that's why I find it fascinating.
Do you know what the buyers end up doing in this situation?
Bottom dollar price. They paid
No.
no money for this. What they
They,
do?
they walked away.
They didn't want to buy the problem.
No, they wanted shovels in the ground. They didn't want a deep discount. They had they wanted to build. These were builders. These were not land speculators, right?
Right.
So, but they were faced with this is the reality. The reality is, okay, there are paths to insurance here, and we're going to provide them to you. One is, it requires the seller's acquiescence and active involvement. At that point, the seller was beat down and just was like, pretty much throwing the towel. The other was the buyer's proactive involvement to resolve the issues themselves. Now they can't twist the seller's arm to resolve the issue, but if they took control of the property, they then would have the standing to resolve the issue themselves. I've got more stories about that. I have seen that pop up more recently, and it always I love considering the fact patterns, but as an insurer, it's so high risk. It's just not advisable, I would say. And plus, you can't get financing, and that's the one thing with insurance is,
Right.
And that was the consideration in both these situations, and the one with the one in DC and here with the problematic neighbors is, well, I may not need financing now, right? But in order to execute on my project, I need financing, and the lenders are not going to are not going to accept either these broad exceptions or uninsurable title. It doesn't work out that way.
That was a note that I made when you were going through, I think, the second case study. Okay, so just because they're buying in cash now doesn't mean we have to obviously stay open to the fact that they will potentially be getting a loan or a construction loan or development loan later. And those lenders, they have different requirements and regulations that they have to abide by, and they literally will not accept a policy with such broad exceptions without additional affirmative coverage being provided. So if the bank isn't going to be able to sell the loan, then they're not going to lend you the money.
No, or if there's an impediment to the completion of the project that's so obvious and apparent, why would they?
They're not going
to walk into the trap. And I think you hit the nail on the head. It's not up to us to determine what the buyers are going to do with the property, right? That it's up to us to get them all the information we can about the property. And when the issue is raised, to help them understand, when these problematic issues are raised, to help them understand, like you said, how this could affect them down the road with a lender and what they may be requiring or requesting, and then they can make the business determination. But we're here as the ultimate resource in the purchase of property, I think.
And I think we can, in that same light of being a resource, we can assist a buyer with piecing those different things together so that they can see a full picture of what they'll be able to do with this property in the future. But really, we rely so heavily on information. People just telling us what their plans are so that we can factor that into our thinking.
Absolutely. Having a clear understanding of what the intent of that development is. Working closely with the surveyors too, knowing what, where these exceptions actually exist, and then working together with, and you're going to talk about this as well, is like, where are the easements, where are the encroachments, and what can we actually do about them?
Exactly. Tell us about. Well, we'll continue talking about like the overall takeaways from these case studies. And I think that it's just more what you were saying. It's like we can work together to find that path if we're given all of the additional information, including a survey, so that we can kind of see where the problems lie.
Yeah, and also, like you said, what are your plans? Like the intent of use played into a lot of these fact patterns, right? In one situation, it was a commercial purchase, but there was no intent to develop this property at all. They just didn't want the encroachments there, right? The intent was like, hey, we just don't want problematic neighbors. In others, it was we're developing this land, and this problem will prevent the development, even though this acquisition isn't predicated on development. Our future use is negatively impacted by these issues. So I just a couple things takeaways is that formal notice letters. I went years without seeing them with any frequency. Then all of a sudden saw multiple in a year. So we're on the lookout for that. Problematic neighbors. You see it in the news. Chris, somebody brought up the other day that there's one in Fairfax where somebody built basically like an apartment-sized building in a neighborhood lot in Virginia. They just literally maxed it out, went up 3 stories, and the neighbors are all like, "How this happen?" Um, so I think people see that.
Perhaps, yeah.
People see that and they get worried. Cash is the ultimate curative. Look, you have a lot more flexibility for buying cash. You can evaluate, do risk analysis on your own. You're not subject to the lender's requirements. But as we mentioned a moment ago, you may one day be subject to the lender's requirements, so be aware of that. And then practical solutions, I think, are always number one on my end. We want to work with everybody to get them what they want. As title, I don't want to stand in the way of a deal. I want to be, a partner towards a successful transaction. But often we don't have control of the what's on the property or what's been recorded against the property in the past. So we do want to take a practical approach. We want to work with everyone, and we want to be able to provide the maximum amount of insurance coverage, right, on every transaction that we possibly can. Because that's our job.
Absolutely.
And then bifurcated risks. This is your wheelhouse, Chris, and I think it's a good point in time to shift over and sort of talk about some endorsements and some issues that you've been facing.
Yes. In providing that maximum amount of insurance coverage, I think that's where we do get to include endorsements to owners and loan policies that can provide those assurances that maybe the lender needs in order to move forward. And we'll talk more about that right now. So, switch this up here. All right, so first I just want to touch on easements for a minute. It really helps if we already know what we're talking about when we're saying unlocatable easements. It kind of helps us see the endorsements in that light and helps us talk about them a little bit better. So, for reference, an easement is usually a recorded document in the land records. It allows someone who is not the property owner to use the land for a specific and limited purpose. Now, I say that's usually a recorded document because there can be claims for prescriptive easements, which are more like the squatter's rights in an easement world. That's not really, with prescriptive easements, kind of just the see something, say something motto, I think, provide or speaks to prescriptive easements. We're not going to spend too much time on that right now, but again, if you have somebody who's saying, oh no, we use that gravel road or something like that, then we can then it's a see something, say something type of a thing. But unlocatable easements, those, again, they're easements for somebody to use your property for a specific reason, but they are not able to be plotted on a plat or by a surveyor. So the physical location of that easement isn't something that a surveyor can determine. So I have heard different folks say, well, there's really no such thing as an unlocatable easement. If there's a surveyor who's willing to put the work in, then it's going to be able to be found. But we do find that in this world where projects are being bid by multiple parties, they allot a certain number of man hours to a project. And oftentimes with some of these very old easements that are described based off of the location of a tree or certain big rocks, in modern day, the landscape has changed, and so it can be very challenging, if not nearly impossible, to locate some of these. But as I'm sure many of us are already aware, we as the title company, we use a survey for many things, but one of those things is to remove easements as exceptions to a title policy that do not in fact impact the subject property. So if we're provided a title exam by that abstractor and we see this list of easements, but through the course of the due diligence or feasibility period of a project, a survey is obtained, an Alta NSPS survey where they are locating those easements on the property, a survey is obtained and they say, okay, well, this one doesn't apply and that one doesn't apply because in fact, the property looks different now than what it did when those initial easements were put into place, and the location of those easements can be seen and see to not fall within the boundary of our property. But then we have these old easements that they can't They have no way of seeing where it is because of the way that it's described in that document, and how that property may or may not show and how it exists today. So that's what makes an easement unlocatable. Where that can become a problem is a lender, and this applies mostly to lenders. It can certainly apply to an owner as well, but a lender may not be comfortable with where an easement is in conjunction to the building or improvements. So if they can't see where that easement is lying, then they don't know how it impacts the improvements for the building and land that they are lending money towards, and that just makes them very uncomfortable. So in those situations, we can obtain approval to issue a couple of endorsements to help them feel better and be able to move forward with the project. Most commonly, I find to be an endorsement within the 2028 series, the Alta 28 series. Most typically, you have a flat 28 or a 28.1. Both of those endorsements can be issued with either an owner's policy or a loan policy. So the 28, it provides coverage to a policyholder against loss or damage due to an easement holder damaging a building or improvement located within the easement area, or if that easement holder is requiring the removal of the improvement that lies within the easement area. So this, I think, in situations referring back to Kevin, the water line easement, we would not be able to issue a 28 in that case, because then the title underwriter, the title insurance provider, would be saying, oh yeah, we'll pay for the building to be moved.
Don't take it off. Just like, let's, yeah.
Yeah, exactly. So yeah, that sort of, it wouldn't be available in a situation like that. But in some situations, we do find, especially when it comes to very old easements that for perhaps utility purposes, and they can clearly see utility lines being placed perhaps outside of that easement area. But if the easement was unlocatable, then it very well could be within the easement area. And then the insurance provider is often comfortable with saying, okay, well, in this particular case, the risk is low, and we would be able to offer a 28 in case it just so happens that the easement holder requires an adjustment to the improvements or cause damage to the improvements based on that reason.
Kristen, you bring up a really good point. As it relates to visible utility easements, do you think that underwriters are and lenders are more, open-minded? If there are simultaneous, if there's an unlocatable utility easement, but there's an existing actual utility easement.
Yes.
Yeah.
Yes.
And then also, I'm sorry, this is also fascinating. So, how often do you encounter situations where there's an unlocatable easement, but then there's an unrecorded easement for the same thing, if that makes sense? Like,
I don't actually see that too often. What we do see are different, like utility lines, whether above, well, not usually below ground, usually just above ground, like pole lines and things like that, where it doesn't fall within the easement area. And the understanding there could be, well, it's just because we couldn't locate the easement that shows them within an easement area. But so we do see that, but I don't often see an unrecorded agreement for utility for lines that exist on the property.
sure.
I don't see that as often. I mean, anything is possible, but I don't see that as often.
But you go back far enough, and there's.
Oh, for sure. Absolutely, because it is one of those things where it's like, oh, well, there was an agreement that, and then it just so happened that somebody has a copy of it from, 1922 or something like this, and it just wasn't made of record. That can happen. It absolutely can. And I think in that situation, if I'm jumping ahead to the Alta 34, and Alta 34, it is, so in the 28 series, we are talking about a specific easement, and either an or an encroachment. So either an easement holder causing damage to an improvement or requiring its removal, or an encroachment of my property either into that easement area or onto an adjoining property, an encroachment of an adjoining property onto my subject property. So the 28 and the 28.1 offers similar types of coverage, but in those two different situations. And also 34 isn't necessarily tied to an easement causing an issue, but just a risk. So what if we have a situation where there's a utility that is active on that property, but there is no recorded easement for it, and the lender or future buyer are uncomfortable with any potential problems that that might cause? Enter the Alta 34. We could pursue approval to issue the Alta 34 for that specific matter, for that specific problem that somebody sees. Now, we know as title agents that it is very hard to provide title insurance over a future potential problem or a future potential something or other. It's kind of impossible to do that. But with a 34, you're given some assurance of coverage where it's probably not going to be an issue, but in case there is an issue, it's covered. So I've taken exception, but given this additional coverage over that matter. Does that make sense?
Absolutely. I can think of situations where we've had to use the Alta 34. Are there any that stand out for you where you're like, thank God,
Right. Well, it's funny. So it kind of depends, and this is where we have the benefit of working with multiple underwriters and having different underwriters as partners on these transactions. There are some underwriters who prefer the use of an Alta 34 for an unlocatable easement instead of an Alta 28, which I always find to be interesting, just kind of the thought process in that. While the 34, since it can be so specific, it is less frequent, especially in my mind, whereas the 28 series tends to be a little bit more common as far as I'm concerned. But there's still, I think that with the 34, you don't have the enforced removal aspect. So you're given kind of some assurances without saying, but we'll pay to move the building. And I think an underwriter, a title insurance provider, is oftentimes more comfortable with that option. It's like, we'll help you solve the problem, but not going to pay to move the building necessarily.
That's a good point. Yep, absolutely.
So with some of these easements, and I think the waterline easement again is a really good example, you can have an easement formally vacated. That can be it's going to take time to do that, regardless of what kind of easement we're talking about. If we're talking about a utility easement, that's going to take time. And if we're talking about an easement for like an old road that isn't actually used, but it's technically an ingress-egress easement, you have to consider who is benefiting from that easement when we're also working to get it vacated, because they're going to have to participate in terminating that easement of record. So we have to, oftentimes additional title searches are needed to see who actually are the beneficiaries of all of this easement area, and work to get them included in that termination, formal termination provided to us as the title company, and we can assist in getting it recorded to clean that up. I have known, especially there's an auto dealership specifically, it was an old VECO or an electric easement that was never used, never utilized, under one of the improvement buildings, and they worked, because their lender required it, they worked with the utility provider to have it formally vacated. I think it took several months. So that we do see long due diligence periods, but I think that one kind of threw folks for a loop, because we cannot control how quickly some of these groups get information back to you, unfortunately. Running close on time here, so I just wanted to also touch on this, that there are different things that we can use to, knowledge is power. So if we know that there's an issue, we can do something about it. But we're not going to know if there's an issue unless we have a thorough title exam, so by a title company and an abstracting partner who are knowledgeable, especially on commercial and land transactions, to be able to find the potential issues. An Alta NSPS survey, we're seeing from underwriters more and more where no survey coverage is even being offered on an owner's policy if there's not a full-blown Alta NSPS survey done. So that's something to keep in mind. But yes, utilizing a prior policy or prior owner's policy from an existing property owner who's the seller on a transaction helps out a lot. That can identify problems or at least provide us with some basis to get the current title underwriter to let us continue to move forward. Zoning reports, those can be very advantageous to us as well, show us different issues that could have arose over the course of history on a property. Leasing information, who else do we know have a right to use this property and how does that impact the future use? Biggest thing is do not cut corners. You got to pay to play, and the more we know, the better. So some of these things can be expensive. An Alta NSPS survey is expensive. A zoning report can be expensive as well. Like the information itself provided from the county tends to be at a reasonable cost, but in employing a company that can interpret that information on your behalf, a lot of our folks use that, a lot of our client base use that, but it does cost. It is at an additional fee. So, Kevin, do you have any other takeaways to add for that?
No takeaways. I think I could probably talk to you for another 30 minutes about everything you just raised.
Kevin, we could talk about this for hours, but that's why we're here.
Yeah, I mean, I think that's why everyone else is here too. They want us to keep going. No, this is
right.
Chris. Yeah, no, this is
So,
great.
sure.
I've learned a few new things as well, so I'm grateful for the opportunity. I hope everybody else, has a decent takeaway, and just understanding that there are always practical solutions to these issues: easements, encroachments, neighbors, boundary issues, and as Kristen pointed out, just it requires us working with you to obtain all the information available so that everyone can make the most informed decision about the best approach.
Absolutely. And Kevin and I do work together frequently to kind of find the path or bridge the gap between something that could be a legal nightmare to get us to a clear to close, something that a transaction that can be closed and insured in some way, shape, or form. But if you are sitting on a survey that looks super messy or have a neighbor disputing what's happening on your listing, don't wait. Give us a call, send us the file, let us help you. We'd much rather work with you to solve the problem now than bond over it, 2 days before closing or something like that. So
Absolutely.
better to say something quick, as quick as you can. But thank you everybody for being here. It doesn't look like there are any questions in the chat, but you can reach out to us. Our contact information is here. You can find us all kinds of ways. So just let us know if we can help you. We're here for it. Thanks for being here.
Thanks, everyone.